Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. And today, folks, it was a big day in the global capital equity markets. We had the first official trade deal between the United Kingdom and the United States. It was announced today. Markets loved it. Markets really loved it. We saw markets ripping throughout the day. We didn't really end at the highs of the day, but still, it looked like stocks appreciated what we had going on. We're going to go deeper into the deal, what we got out of it, why it matters, why I actually thought the presentation of the deal was pretty damn strong, what it means for equities. We got a lot of other headlines on a lot of other stocks, macro. Let's get into it. All right, so let's get started with the UK deal that we had today. Now, late last night, after the market recap, the daily recap came out, I saw a bunch of comments on the video, and a bunch of people said, hey, we got this Trump tweet. And the Trump tweet was for the fact that he was going to be announcing a big deal this morning. He did end up making that announcement, and it was with the UK. I thought the announcement was pretty damn good. Lutnick is not someone who I think necessarily people get excited to listen to speak, the Commerce Secretary. But on this particular subject, the way he explained the nuances of everything, the way he explained the reasoning behind the incentive structure between the United Kingdom and the United States, the types of concessions we got from the United Kingdom when it came to ethanol, beef, U.S. machinery, etc., along with the fact that we kept the 10% tariff on the United Kingdom, I thought it was a pretty good presentation. And it was a presentation that probably is going to be the easiest one that we have to present to the American public, given that we have a surplus with the United Kingdom, and the United Kingdom is an ally. The United Kingdom probably wanted to give Trump a bit of a win. So it was one of the more easier wins that we could get when it comes to this ongoing trade war with the entire world. China, Japan, South Korea, Australia, India, those can be much more harder companies or countries to get a realistic, meaningful trade deal negotiated with. But this one was not bad. And I think you got to give credit where credit was due. Lutnick did a really good job. Here's a clip of him explaining why we are engaging in this trade deal and ultimately what the United States gets out of it.
And the fourth largest that we export to, right? So it's a huge market, a top 10 market. If you remember Liberation Day, they were at 10% because we have balanced trade with the UK, right? They say they have a surplus, but of course that counts gold bullion, which is, so let's just call it balanced trade. So how do you open up a market in balanced trade? People think it's impossible. They've always thought it was impossible until President Trump came on the scene and changed the way things work. So here's what we've got. We've opened up new market access, ethanol, beef, machinery, all the agricultural products. They've agreed to open their markets, and that will add $5 billion of opportunity to American exporters. So the question is, why would they do that now? Because they've never done it before. And we still have our 10% tariff on, which will produce $6 billion of revenue for the United States. So the idea was, how do they keep their jobs, protect their economy, and do the best for their people while opening the market for us? And the way is they studied it, their team was exceptional, and they tried to figure out the markets that they're importing from other people and try to send them over to America. So why were they always favoring others and not us? And what they've done is they've found the ways to do that so that we have new access, right? But the UK workers are protected, and that was the balance. So we did a deal with them in automobiles, and you know, if you're not building here, we charge you a 25% tariff. But the president, and by the way, I want to make this clear, while Jameson and I worked hard, this was the president's deal, and people think, oh, that's not the way it works. If you got to sit next to him, I have the best deal maker to my left, and if you don't think that we take advantage of him calling the prime minister and getting that deal done, you don't understand who's the president of the United States. So he's the closer. He gets deals done that we could never get done because he understands business, he understands deals, and that's why we're here today. So he agreed they could send 100,000 cars into America and only pay a 10% tariff. And that protects their car industry. And remember, we do 16 million cars a year. So this is only like 0.6%. But for the UK auto people, this is tens of thousands of jobs that the president agreed that he would protect for them. So he made that deal, right? Then steel and aluminum. Right? Their steel business has been destroyed like everybody else has been destroyed by people dumping steel into their markets. And British Steel had announced it was closing down. So the British government, as part of this deal, nationalized British Steel, and they're going to match the kinds of models we do. They'll put tariffs on, they'll put quotas on. They want to do it with America so they can be part of the resurgence of steel and aluminum in America, and that saves them, again, thousands and thousands of jobs.
So the presentation was pretty good. After that, we had Trump take Q&A by reporters, and Trump was feeling really excited. He was feeling very amicable to the United Kingdom and to the trade representatives that were there in the Oval Office with them. He ended up saying this that really got the markets to be excited.
You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before. That's a very important element of all of this. If we get that.
As a result, markets absolutely loved it. I mean, we had Palantir that had a lot of fun today. Palantir fell about 15% after earnings, got to like 107 at some point. Palantir got to 120. I think right now it's currently at 119. Robinhood finally break through 50. It was stuck at that 46 to 47 range. Robinhood here right now 54.52. You had Palantir 119.14. Nvidia a little bit lagging on the day 117. The S&P 500 was up about 1.5% at one point. S&P 500 right now ended off the day 564, up about 0.54%. The point is, this was a good beginning to the hopefully de-escalation of the trade war. Trump was also asked, hey, are the Chinese 145% tariffs going to come down? And he said, yes, they're probably going to come down to somewhere between 50 and 55%. Hopefully it's a little bit lower, but he pretty much acknowledged that we should be getting the tariffs down. And then he said, it doesn't matter who made the first call. Let's just get a deal done, which is the exact opposite of what he said yesterday, where he said, hey, the Chinese made the first call and they shouldn't be lying about the fact that they called us first. Like he was, it was all about ego and who made the call, who didn't make the call. Today, he explicitly was like, I don't care who makes the first call. Let's get a deal done. I think Trump is getting to the point where he realizes, hey, I can't get into a recession. Jay Powell's not going to cut the rates until I ease up a little bit. And if we don't cut rates, that's going to be a whole bigger issue that Trump doesn't want to deal with. Midterms were looking bad in April for the Republicans, given the market was at 2022 levels. And now that we've recovered from those levels, it looks like midterms might not be as bad as long as the economy holds up. And I think Trump also is probably tired of this game. He knows that he wants people to love him again. A lot of people hated him over the past month based on all this volatility. If he can get the UK deal done, the India deal done, the China deal, Besant's probably on a private jet right now, headed over to Switzerland to begin negotiations with the Chinese, then I think you're going to have an economy that's going to be moving in the right direction. So we got one deal out of the way. We need a little bit more to justify the valuations that we're at, to justify the 22 times forward earnings that the market is trading at. But if we get more deals, inflation comes down, earnings growth holds up, we might have a chance to really continue to be in a bull market. All right, next topic, Bitcoin. We're back over 100,000. Today has been absolutely incredible for Bitcoin. I mean, not only just back over 100,000. Currently, as of right now, we are at 103. We did hit 104 today. Look, my quick take here in terms of what's happening with Bitcoin is that I don't think this is retail driven. Google searches for the term Bitcoin are not at all-time highs. Robinhood and Coinbase aren't even in the top 200 in the App Store. And usually they get to like the top 50 and realistically the top 10 by the time that Bitcoin has this type of run that it's been having. That's not happening. Bitcoin was at 78,000 2 weeks ago. It's at 103,000. The ETF inflows yesterday were 143 million. That is nothing when it comes to retail, who tends to be buying the ETFs, BlackRock, ARK, etc., in order to get Bitcoin to get more inflows and momentum. I think, and I'd be very curious to see what people think in the chat about or in the comments about this as well. I think these are sovereign wealth funds. I think these are institutions. I think these are money managers that are thinking of Bitcoin as a counter-cyclical trade, which quite frankly, you can't blame them. Bitcoin has basically been a counter-cyclical trade across all this volatility. I mean, when the S&P 500 and the NASDAQ were down almost 15%, Bitcoin was down like 7%. Usually Bitcoin is down 30% when the broader indices are down 15%. Like in the past 5 years of like looking at the markets and looking at crypto, have never seen Bitcoin act the way that it's acting. And now you talk about people that have diamond hands. The conviction of those that believe in the debasement of fiat currencies and the necessity to have a fixed amount of supply when it comes to a currency that actually genuinely can store your value. I think that conviction is growing deeper and deeper and deeper. What I'm trying to say is people are getting orange pilled more aggressively than ever before. I mean, because when you see MicroStrategy and Saylor buy Bitcoin throughout this dip, quote unquote, that we've had, and just say, you know what, I don't care, I'm buying, that shows a lot of people what conviction looks like. Now, whether they're going to be right or wrong, time is going to tell. But the point is, I think he's inspiring a lot of people to say, hey, this is an asset I want to hold on to forever. I'm not going to be able to just let go of it. So even if I'm not buying more, I'm not selling more. And then if the big guys are buying more, it creates more pressure on the asset itself. and that's what's letting Bitcoin get this momentum. So big day for Bitcoin, big day for Hood, Coinbase, MicroStrategy, all these companies that are proxies to Bitcoin. The miners had some bad earnings, CleanSpark, Marathon. I've been pretty aggressive on saying I don't like the Bitcoin miners as a business. And, I got out of them back in January 2024. Both of them down about 5% after hours in terms of their earnings. But it's just because the miners can't really create a profit. If you want to benefit off of the volatility of Bitcoin, I think you own Bitcoin, you own IBIT, you own the Bitcoin ETFs, or you own Hood, Coinbase, MicroStrategy, things that are actually associated and have alpha against Bitcoin. Outside of that, if you have any crypto exposure, you've done pretty well today. And Bitcoin back above 100,000. Next quick update is Grabby Grab. If you've been following the Grab story, you know that Grab is trying to buy one of their biggest competitors called GoTo. That is an Indonesian company that is going to be competing with them in ride-hailing, deliveries, etc. Reuters is reporting that Grab is in advanced discussions to acquire GoTo by the end of Q2. It looks like it's happening, folks. It looks like it's happening. Grab did not buy a single share in Q1. 30% of their market cap is in cash. Grab is at like $4.97 right now, basically at this $5 range. It's a lot of resistance at $5. I think the market is waiting for confirmation on this deal before it can take up above that range. But they're not buying back their stock. They're looking to get a $2 billion loan, $6 billion in cash, $13 billion enterprise value. They're going to do about $3.4 billion in revenue this year. They are now profitable, adjusted free cash flow profitable, adjusted EBITDA profitable, net income on a GAAP basis profitable. Everything's going up and to the right. I like management a lot. I trust the founder. I really love the CFO in terms of his ability to communicate. It just seems obvious at this point that this acquisition is happening. You don't get these many leaks by the Bloombergs and Reuters of the world. These are not your mom and pop blogs, right? Like if they're putting this stuff out, it's probably because they have really good sources that are telling them, hey, this is in advanced discussions. So the headline here is by the end of Q2. We've got about 2 months left of Q2. If they get this bad boy done by Q2, I mean, it's going to be very, very exciting. My valuation model that has them at $10 by 2027, which I know is aggressive. That would be more than a double in a year and a half, which is, contrary to popular opinion, not an easy thing for a stock to do. I have a lot of options in this company. Call debit spread, 7.5, $10 for January 2027. So if the stock goes up 2x, my option's 7x. So I am heavily invested, not only in the thesis, but I do believe there's a shot it could actually get to those levels. I don't know if this acquisition is going to make it easier for it to get to those levels. That's my assumption, but you never know with a merger and acquisition. Like sometimes it doesn't go well. Sometimes the market needs time to see how it plays out. I just think the quality of this company and the level of consolidation that's happening in the industry. DoorDash bought a couple companies over the past week and they reported on their earnings. You're seeing more and more of these smaller players that just can't compete with the DoorDashes and Ubers of the world. Consolidation is happening. Southeast Asia is a massive region. If Grab were to get the $1.2 billion in revenue and 100 million users that GoTo has in Indonesia being one of the biggest markets in Southeast Asia as well, I think that would be a very healthy acquisition and it would be a good use of capital rather than them just buying back their stock. It would get us to 30 to 40% EPS growth over the next coming years. And I think that's what would get the multiple on Grab to get closer to that $10 range in a much quicker way than I'd expected. So we're going to see what happens. But if you've been following the Grab story, this is a name. This is my third real pick. My first pick was Palantir. My second pick was Hood. In this industry, you're basically judged on your picks. I mean, if you're a content creator, a money manager, like your picks are your reputation, and you got to be willing to put a pick out there when people might not believe, even if it's controversial. It happened 2 times with Palantir and Hood. Going for the third one, I think there's a shot here. I might be wrong, but it looks like there is a real possibility for this company that is sitting at a 4-year consolidated base of basically 450 to hopefully be above that price in the coming future. So that's the update that we got on Grab. All right, last quick thing before we talk about Palantir to end off the show today is macro data. So initial jobless claims came in at 228,000 expected versus 230. That's a beat. We need 350,000 jobs a month or a week that we're losing in terms of initial jobs claims to say we're in a recession. We are not there yet. This is also probably why JPAL is not cutting, because non-farm payrolls are good. Initial jobless claims are way better than expected, which means it's hard for him to justify the labor market is weakening, although I think inflation is coming down, so that should justify the cut. But nonetheless, that was pretty good data in the context of the labor market, and that was not bad that we saw today. And then one other final piece of macro data right here is the Bank of England cutting rates by 25 bips again to now 4.258%. So you've had a lot of countries across the world, whether it's the European Central Bank, the Bank of England, the Bank of Canada, that have been cutting their rates. The United States is the only one that's not cutting. which means eventually I think we're going to have to start the cutting process. I know we talked about it yesterday. JPow's not feeling comfortable enough to begin the cutting process. And maybe the trade deals will help decrease the volatility, which gets him to realize, hey, it's time to cut. We should not have the inflation rate be, we should not have the federal funds rate be double the inflation rate, or basically close to double. And so if he takes that more seriously, hopefully some of these other countries cutting around the world will get Jay Powell to cut as well. Okay, last thing I want to show in this daily recap is a clip of me on Dumb Money, the Dumb Money podcast. Chris Camillo, Dave Hansen, Jordan. Those guys are awesome. Great retail community. Some of you guys probably know them. I'll leave the full description or the full link of the podcast in the description. But I want to show a clip that up from the podcast where we talked about Palantir. Palantir's valuation, obviously, we've talked about it a lot. Valuation is very aggressive. Stock is back to basically where it was before earnings, even though the earnings weren't good enough, at least initially, for the market to get excited about it. I talked about it with Chris Camillo. Chris Camillo, I'll also leave this link in the podcast, this link to the podcast in the description. I've been talking all day. For those that haven't seen it, it is the #1 most viewed video on my channel. And it's Chris Camillo when the stock was at $30, basically saying, who cares about the valuation? This is a unicorn. And I wish I took his advice even more seriously, because I'm pretty bullish on Palantir, but even I was thinking at $30, hey, almost $100 billion company, valuation is getting up there. But sometimes you can't just look at the valuation. And this is something that, you know, I understood when the stock was $7, $8, $10, $15. As it started getting higher and higher, one of the biggest mistakes I made is I didn't buy more heavily into that strength. Now I don't care. Now, you know, I bought at 120 the other day. I'm buying Robin at 50. Like now I kind of just don't care. I want to be able to mitigate my risk with covered calls and maybe buying some puts and things like that, but not have exposure to the name just because I'm afraid of the valuation. So Chris Camillo, someone who turned 20,000 into 60 million, if you've ever heard of his story, he played it the right way and said, this is a unicorn. They're going to keep going higher. So here's a clip of us talking more about that journey. I think the only person, maybe there's a handful of them that has been saying it's going to keep going higher and hasn't been as cautious as I've been, is you. And you just said, you know what, forget everything, forget the valuation. I saw the video that all three of you did, and Dave and Jordan were pushing back as they should have on the valuation. And you were like, nope, this is just, it is what it is. It's Palantir.
So well, I was talking to Chris about this yesterday because I was one of the people that thought the valuation was nuts. But I think what makes sense about it is that there's no public market for companies like this yet.
Yeah.
Right. And so it's like your only outlet to be able to invest in AI.
Let me tell you something. The most common comment that I got sent to me, I think even on that video, were Palantir investors that were ripping on me because I was so late to the show.
Yep.
They thought me buying Palantir, I think I actually started buying it at 28 and then to 33 or 34, like between the upper 20s to low 30s. And they thought that I was so late. Yeah. And by the way, I was not just buying Palantir. I was layering in massive call options on Palantir at that price. And they were like, this is insane. This is toppy. This is like, you missed the ride, man. We've been on this ride for 8. I'm like, and I kept explaining to them, I was like, no. I've been trading NVIDIA while you were trading. Like, I've been doing fine. Like, my cost of capital is extraordinarily high. But like now is when I want to play Palantir because I see the next lift happening as we get a broadening of awareness of what's happening at Palantir beyond the Omits and the small circles of the believers. It's about to transfer to a broader a world of retail investors and institutional capital markets who have always been skeptical of Palantir because of their CEO. But at a certain point, you can't be skeptical anymore. And I saw them like crossing over, right?
We did our podcast 2 weeks before they got included in the S&P 500.
Yeah. And I was just looking back at our channel. The first time we even mentioned Palantir, we'd been avoiding it because it was just too much to wrap our heads around. And I believe at the time, like, it was just hard to get. And watching your channel is actually one of the things that got me thinking more about it. But it was 7 months ago that we did our first video called Why Palantir is Our New Favorite AI Stock.
Yep.
And really, it could have just been stock because we just wanted to put AI in the title.
No, but I just really want to commend you, Chris, because it is there's a reason you are who you are. And it is at the time, I'm the guy who's the most bullish on this thing, I think, on the internet. And I'm listening to you saying, no problem, $80 billion market cap. What's the issue? Just buy it. And I wish I had listened to you more deeply because I would have gone in even heavier. But my valuation part of the brain couldn't really grasp what you were saying. But it's why you made a career the way you made your career off social arbitrage.
No, I still have a decent Palantir position, but obviously all those options are cashed out. I even cashed out a chunk of my equity. I have a good, decent position in Palantir, but I don't really watch it anymore day to day. It's not like my area of focus. The reason why is the dissemination of information and knowledge and acceptance of the type of company that Palantir is now widely accepted in the market. Okay. So generally that's always an exit point for me. But I still believe that there's a much longer term storyline here. It could take years and years and years to play out. So like, again, my cost of capital is high. So I don't have a huge position in Palantir anymore, but it's reasonable. And I still think the company has a bright decade ahead of it, you know, if it executes. And there might be times where I get back in heavier, but I appreciate that. It was, you know, you were obviously way earlier. And we all learn from each other.